Good afternoon and welcome to the end of week review for this week. So this week we finished off week 12. So next week will be the last week for the first quarter. And this week is huge. By the way, today is a Sunday afternoon, so it's good time for us to do review of the week. So this week we have huge FOMC meeting right there on Wednesday. And here's the agenda of our review for today. Let's see how much we can cover. But the very first thing we're gonna dive into is how we build our FOMC. I think we mix type FOMC playbook with that. We're gonna look at our FOMC playbook, and then the second we're gonna cover is we already know our setup, which is 4 breakout, reversal type 1, type 2, but also in a nomenclature term, we remember when we just start trading, we heard a lot about double bottom and double top bottom, but now we look into detail and we blend with our setup, we can see that that's true, but it gives us a more detail how the double bottom or double top formation like that. So here's a double bottom, and we see this week 2 days in a row the double bottom pattern is so beautiful formation, and we have to add into the time in there. It's gonna give it a very high probability setup right there. And also we're gonna look to see on the Friday, we look to build up on our Friday for this week profile. We're gonna see, so for this week the Friday is non-expansion move, so we're gonna see when the Friday gonna be expansion move. Expansion can be both, can be either way. It's gonna be a reversal or it's gonna be continuation. And the non-expansion move is gonna be consolidation. Basically, it's gonna be a doji candle, test from above, test from below. So that's that kind of basically we group them all together. It's called non-expansion move. So that's kind of 4 main topic we're gonna go through today. So go back to our FOMC playbook. So today we have another, not today, but this week we have another data point just to look at FOMC meeting. So far we have we look back to September 2, 3, 4, 5. So you have 5 data points already. For this week, the data point very interesting because we see the expansion move is explosive. We haven't seen this before. Basically, we categorize into 2. Right now, it looks like a little bit messy, but we're gonna categorize into 2 scenarios. The first scenario is the candle at 2 p.m. 14-hour expansion. Then what happened? And if it's a non-expansion, then what happened? So that's very simple right there, right? And then we know that look for the buy side and sell side liquidity rate when they inject liquidity. Then you know that when it hit that, it will reverse right away. And another note we have is pay attention to the 3:15 and the 3:30 p.m. candle right there. It gives us some very good mood right there. Okay, so now go to see what happened this week on Wednesday. when the FOMC data or information released at 2 p.m. Eastern. So let's take a look right here. We see how liquidity were ingest into the markets. So here's we put all together for March 19, which is Wednesday this week. So here's how we see at the beginning of the week. Here's our weekly and here's our monthly right there. So after a huge move the prior weeks, we still have a test from above right there. That means it's still bearish. Then this week it looked like it's gonna be a non-expansive move. That is coming to our mind when we look at the charts, alright? And then we look at the right here. So we look into the Wednesday. Alright, we take this screenshot on Wednesday at 6 a.m. So we see that the Monday is set the range right there, and the Tuesday it did break the Monday low. So the logic is gonna be it may go and take the Monday high. If it failed to break lower, that's the Wednesday T6 right there first. And here's the 50 minutes in the opening at 6 right there. So we see that the London still consolidation in the prior PM right there. So let's see. And here's at the end of the Wednesday, we see that candle go and take in the weekly. It trade the sell side liquidity right there. And here's at the end of Wednesday, it did trade the Monday high right there. And as soon as the Monday high were rated at the level 57.59.75, it reject right away. And we look right here. So here's the detail we see on the episode MC meeting Wednesday. You see that huge expansion right here. So basically we see a new pattern that we haven't seen when we review the data sets for the FOMC meeting. So basically we have a 2 p.m. expansion, and then we have a non-expansion move on 2:15 or 14:15 around. It did trade the high, right? So we feel like it's gonna reverse, but it did not. It did not reverse yet. It's just a retracement, and then boom, it's expansion. So right here, it gonna rate the Monday high right there, and as soon as it rate the Monday high, boom, it's retraced back. We need to took this trade. We know, we see that, and as soon as it rate, we see a huge rejection after it rate the Monday high, and it create the high of the week right there. Then it's a retrade. You see right there on the daily. You see right here. You see that how it start on Wednesday, but as soon as it rate the Monday, is retrace. It's retrace right here. You see that? That's the Wednesday, right? Rate the Monday at 57.59 exactly right there. Isn't that right? Right there. It rate at 3 p.m. It takes an hour to build up, and then boom, it just retrace right there. We took the trade right beautifully on this week. Yeah, we took the trade right there because it had to retrace. It's just 1 hour go straight up, rate the buy side or the high, boom, It retraced. We did take advantage of that. So that is the pattern we see on FOMC meeting this week. Let's review again on FOMC on January 29. We don't have the FOMC on February. Look at the 29th. What do we see right here? So here's our daily time frame. So we see that at began it already rate all the, see that it already rate all the buy side right there at high. So it tell, and we have a lot of tests from above right there. So it may tell us that it's gonna going down. And here's the beginning of the day right there. And here's at the end of the day, it did go right low and then it retraced back. So let's see. So here's what we have. So by the time it opened at 9:30, it's already broke down to the open at 18 right there. So it tells us it's gonna be a down close, but it's not expansion at all. It's just a, you see that it's not expansion day. You see that it's test from above day right there. You see right here, it's completely different from this week. Right, this week you see the huge expansion, at 2 p.m. Is that right? Yeah, but this the one on January is completely different. So right here you have a 2, you see the 2 p.m. right here, expansion, and then the 2:15 create a reversal right here. You can, yeah, it's type 2 right there. Test from above, break and reverse. So it's reverse at a, it reverse as a 2:30 right there. So, but right here we don't see it rate the sell side already. It did rate the buy side zero. So it gave us a signal right there that it don't need to go here and rate the low. So as soon as you see the setup rate, you can go long right here. Yeah, and it tells you that the 2 leg down is complete right there. So that is the January. We go back to December. All right, let's see December, how this FOMC is in January. December right here, here's the beginning of the day right there. So basically you see the Monday and the Tuesday rate the low right there, and then at the beginning of the day it did rate the low of the Tuesday. It did rate the low of the Tuesday. Yeah, it rate right there. See that? The low of the Tuesday. It did rate it. But that huge gap right here. And you see the setup right here at 9:30. And right here is, we have reversal here, but invalidate. And then boom, right here as at 2 p.m. you see the huge sell up right there. So if we look on the daily table, we can see that we mark the low of the Monday, and you see that Tuesday tests the Monday above right there. So it break down the Monday low, then we know that it coming down right there. Yes, I think it break the Monday low, right there. It break the Monday low, and then it break down, huge breakdown from there. I think we jump back to, or so January. No, we jump back to December. Where our December? December 18. Okay, so right here. So by the time at 2 p.m. it's huge down move, and we see it right there. So it's break, and at 2:30 tried to reverse but fell. So it's the next leg down right there. So right here is not really anything we can do unless we just take our chance right there, because it's no row setup right there. But one of the key that we have to find out the Monday, right, is this 18, the Monday low. Because we look at the daily, you can see give us some signal right there. So the Monday set the range, right, and then you have Tuesday is test from above the Monday low. Let's go to the daily chart. All right, we pull out our right here. Actually, yes, right here. See that? That's December 16 and then 18 right there. So you mark that candle. Let's see. I copy this one. And what is this? I think let's call it low Monday. Excuses. Low Monday. Yeah, you see that? So the Tuesday is test from above, and then the Wednesday, boom, it's just real breakout level. So the low is 61.22. 61.22. Is that 22? 61. Hold on. 22, not 21. So yeah. Hold on. We see something right here. Yes. Yeah. That is the daily right there. Let's take screenshot right here. And then you have a Thursday right there, and then Friday. Wednesday, Thursday, Friday. Yeah, Friday. $20. Okay, let's take screenshot. We're gonna rework. So basically we do a little rework on the week 51 December FOMC meeting right there. So it's the beginning of the week. We see the Monday right there, right? It's set up. Then we go into the Tuesday. So the Tuesday close above the Monday. It raised the buy at the sell side, the low, and then it closed above. That's make it test from above right there. So we have test from above the Monday low on Tuesday right there, right at the level of 61.22. So that can give us a bearish signal. Then on Wednesday it break that level, right, and then we have we actually delete a lot of area, but basically all right, we do a little bit rework on the daily right there. So basically for week 51 we have FOMC meeting December right there, So basically Monday is set the range for the week right there. On Tuesday, if we see it test from above and give us an idea that bearish right there. On Wednesday, it broke the level right there. It's expansion, right? Dow move expansion, break it, and then Thursday we have retracement, and then Friday it make a reversal after 3 times break the sell side liquidity. On Tuesday it rate a low of Monday, and on Wednesday it rate low of Tuesday, and then boom, on Friday it rate the low of the Wednesday, and then it reverse. You look here, right there. So this is the whole week right there on the Fed, on the 15 minutes. And then you drill down, detail a little bit, you can see that. So on Thursday is still within the range of the Wednesday PM low right there. And then when it go into Friday, you see the London right there go real low rate, both the Thursday low and then the Wednesday low. And after that, it's just reversal huge right there. The 9:30 is kind of break above right there. It did break the London, but it's kind of test from above and give us a very good signal. And then you look at the the 9:45 right there. As if you mark right there, you can see a remarkable setup first right there. Let's drill down a little bit closer. You can see the setup. So if we go to detail a little bit, we drill down, we can see that there are a setup first right there. So after the expansion move right here at 8:30, you can see that the non-expansion candle right there is just a inside bar candle. That means the expansion move right here is not finished. It's gonna be continue to go up. And you see that, you see the right here where the setup, you see test from below, break, and then reverse. Right, it's gonna be reverse. But the reverse right here got flipped at 4:45 right there. It's supposed to be close below that, but it did not. And you look at the low of that candle at 5900 right there, and you see how many times it tried to break that? 1, 2, 3, 4 times. It couldn't break. Then boom, at 10 o'clock right there is explosive. So it gives us a very solid bullish case right there. So that is the FOMC data sets we look so far. And if we look at November, let's look at November, what we see. November 7, right? November 7 is week 45. Beautiful. Let's pull out November 7, week 45. Week 45, yes, 2024. Sorry, here, November 7, week 45. So here's the end of the week right there. You see the Monday, that is the weekly, and then here's how the Monday, and here's how what happened. So here's how it played out on the. So here you see that the 14 is non-expansion move. You see that? Non-expansion move. And then 15, 30 is non-expansion, and boom. You can see that if it breaks the level, then the 45 really explosive right there. And that look at one more data point is September 18. Where our September 18, which is week 38. Yes, right here we have September 38. It gives us a setup similar. You see the Monday right there, and you see, oh, actually it tests from below, not test from above of the Monday. Very interesting to see how it's play out. So right here, you see that it's bullish. So you see the Monday high right there, the Tuesday test from below, the Wednesday also test from below. Boom, you have expansion on Thursday, and then Friday is non-expansion move. And here's is how is plays out on the Thursday. So on the Thursday we see that is it's very hard, a little bit hard to trade. At first you see that is it tests from below right here, but if you catch this move, then you better get out. Auto reverse very quick, and then you reverse back. It rate you see that it rate the low of Tuesday. That's it. It didn't rate the low of Monday. But as soon as it rate the low of Tuesday, boom, you see the setup right here for breakout. Reversal type 2 right there. If you meet the trade right there, we can go again right here. It's a type 1 is more reliable. Type 2 right there. But you have to get up early. If you come in late, right here on the 9:30, a little bit hard to trade right here, but it still have a setup type 1 reversal right here. So basically you break that from the reverse, then you can take profit and re-entry right here. You have another setup right here, type 2 right there at this level. See that tap from up, break and reverse. So right here is a double bottom right here, you can see double bottom. Okay, yeah, talking about double bottom, right? In this our agenda, we did talk about the double bottom, right? Double bottom. Let's see. This week we have 2 of them. Let's go to that, and I think we need to wrap up right here. So go to double bottom. Basically, is a reversal model right there. So double bottom or double top. Okay, so this week we have 2. Double bottom for this week. Okay, so we have FOMC meeting right here. Here's our FOMC meeting, double bottom. Now the day after FOMC meeting, which is on Thursday. So here is look like right here's right before 9:31 right there when the market opened, just one minute. So you see the setup right there is the first leg down. It's gonna finish on a look. You mark right here. You see that it did not rate the sell size. That means this not finished. Wait for its breakdown at level. See that test from above, break and reverse. That is type 2 right there. So at the 1 minute, it looked like scary. It looked like gonna break this. It's gonna take this sell side. And that's where we try to go short right here. We make mistake right there. We try to chase, but if now we look back in hindsight, we saw that it's set up type 2 reversal. See that? After 2 minutes, it reversed right away. By the way, we didn't took that. That's right. We misspoke. We took the trade later on. It's similar to that. We do trade on Friday. So only 2 minutes you see it go back and reverse that. So test from above, break and reverse. That is type 2 reversal right there. It's a type 2 reversal. And look at the time at 9:30. So it's perfect right there for it to go long. See that? That's beautiful instead of this called double bottom right there. TBP where double bottom. Basically our setup right there, which is type 2 reversal. You look at that in the detail, breaks, test from above, break and reverse. here's the simplified form. We always go back to ourselves. So here's our type 2 reversal right there. I have two type 1 right here and type 2 right here on the right side. Here's the long setup. Tap from above, break and reverse. That's what happened right here. Touch from above, break and reverse, and look at the time at 9:30. So it gives a very high probability setup. We missed this way because it happened so fast, and we're not in front of our computer at last time either. Yes, so it's the so-called double bottom right there, and basically reverse the type 2 for us. And here's another one we see on this Friday. Right, Friday is this Friday. Yeah, this Friday is non-expensive move for us. So let's see. So when you're going right here, right, time is around 12 noon right there. You mark a level, you see that it tests from breaks that from below, and let's see how it play out. So at 12:02 and then 12:09, 5 minutes later, you see it break that level. So you keep a strong setup that it's gonna reverse from here or retrace from there. And here's the liquidity. You see that is only happen when it rate both London, the prior day PM or prior day low right there. It rate both them. So the more we wait for the liquidity pool will rate it, the better chance we have it. So in this case, it's just a 2 right there. At 9:30, you see this kind of non-expensive move, so really be careful. You have to be patient because at 9:30, it's a huge expensive move. And then right here, it did rate the low. Then our question is that this finish or not. Right, it's not so clear. If you look at the 9:30, you see it's not so clear. Then wait up, chase right here, and we make a ton of mistakes. But that's how we learn. And at 12 noon, we saw that we jump in right away, but we take the profits a little bit too early. But here's where I have the double bottom right there. Right, one bottom right here, second bottom right here, and look at how it formed. Breaks that's from below and reverse. That is a type 1 reversal right there. That is the type 1 reversal, a true. All right, I think that's it for today, for this week. We thank you for your time and your interest. We're always grateful for this opportunity. Day by day, little by little, in every way, we're getting better and better. We do what we love, then success coming our way. Have a great weekend, and see you next week. Bye for now.